All right, guys. So today we're going to talk about trade management, basically what you do once you're in a position. And I got a really good question from Trade Report member William today. And he addressed an issue that is a trading leak for a lot of traders. And it's part of the reason why so many traders are not successful. Basically, you're not getting the proper reward to risk on your trades, taking too small of a profit, basically because you're micromanaging your trades. And this relates to an evolutionary concept that I'd read about in a book. I can't remember the book's name. When I do, I'll let you guys know. I'll look it up. But basically, what it is, back in the day when we were out foraging for food, once we found something, rather than collecting it or waiting, instead of being patient, we would just grab it right there, eat it right there, because it was a necessity. We had to have that right there. And that's kind of stuck with us, and it's what we do with trading. So basically, you enter a position, say you enter it at 100. You set your stop at 95 and your target is 110. You go in with the perfect plan. You've got a 2-to-1 reward to risk. You're either going to make 2,000, you're going to lose 1,000. And that leads to successful trading because you're not relying on a win rate. You could have a 40% win rate and make a lot of money trading like that. And what happens is you get in with that plan, but you get a point or two and all of a sudden you see that profit, and going back to that evolutionary state we were in, you just want to grab it. It's yours. Take that small profit. The problem is, over time, these little profits get wiped out by bigger losses. So you're really relying on a 70, 80, 90% win rate, which is not sustainable for most traders. So it's really a bad habit to get into. Actually, with our trading now, we have been doing that in a sense a little bit because we've adapted to this choppy market. So sometimes you have to change it up, but not to that degree. And let's hit our current trade to illustrate this. So right now we're in Buffalo Wild Wings and Twitter, and we'll take a look at Buffalo Wild Wings here. This was an earnings breakout setup. We're playing the breakout pullback. We entered here around 189.50. So our stop is below the breakout bar, down here probably around in the 186 range. And we've got a target here around 195, even 200. We'll reassess with the market conditions here. Now today we had a move up to 192. And we're back at 189.74, so pretty in line with where our entry was. And again, we've got a 2 or 3, maybe a 3-point stop. So we need 6 points on our win, which would get us to right around 205, which is the target. And William here, his question was, he's trading Twitter and Buffalo Wild Wings, which we're in right now, talks about trade management. I know you're not a fan of micromanaging positions, and that's exactly right. Once you're in a trade, basically you need to set it and forget it. You got your stop in place, you've got your target in place, and then don't worry about it. Whatever happens, happens. You're trading for the long run, not for this specific trade. So he's exactly right about that. But once I get in a position that moves in my favor, like Buffalo Wild Wings and Twitter, what if they start dropping afterwards back to my entry level? Sometimes that can be tough to deal with because you see that couple of points and then you just want to take it, and it's tough when it gets back to your entry level, or even if you lose on that trade. What you have to remember is you're trading for the long run, not that specific trade, not that specific point or two. So you've really got to keep that in mind when you're trading. And I know sometimes it's tough to do. You give up a small gain, but you really have to stick with that plan you have going in. And when you enter trade, there's going to be fluctuations. That's natural, especially the volatile stocks that we trade. We're trading momentum stocks, which are volatile. There's lots of back and forth. So you just have to keep that in mind. And, unless you see something in the market that really jumps out at you, you should stick with the position. For me, we entered at 198.50, 189.50. It got up to 202. That's a 2.5 point gain. I'm not even getting 1 point 1-to-1 on that trade because I've got a 3-point target, 3-point stop. So if I'm taking a profit at 2.5 points, I'm really relying on a very high win rate, which is very difficult to do. I want to make it easy on myself. You know, I want to get these 2-to-1s, 3-to-1s where I can be, if I'm breaking even on my trades, I'm making a lot of money. That happened last year where last year was a tough market to trade. The win rate over the year was right around 50%. And on the $100,000 account, the gain was $20,000, even with a 50% win rate. So, you know, logically, you think you've got a break-even win rate, you're not making any money. That was not the case. Because we know how to manage our reward to risk, made 20% or $20,000 in a very tough market to trade. If we look at this year, he mentioned, I look through your stats, and I don't see any break-even trades. That is correct. Unless there's something significant in the market, I very rarely am going to break even on a trade. I'm either stopping out, which I do not mind taking small losses. If you look at my trading stats here, and actually they're skewed a little compared to what I normally do, because I normally am always looking at, you know, 2-to-1, 3-to-1, 4-to-1. So you would see more of these on the $100,000 account. You'd see more of these 4-figure gains, you know, the 1,000, 2,000, even 3,000 and 4,000 gains on the swing trades. But I do have more smaller gains here, but I'm still getting a decent reward to risk on them. I'm taking quicker profits this year because it's in a choppy market. You know, that's when we adapt. But still, I'm basically getting close to my targets. And if you look at the losses, I'm still keeping my losses relatively small. You know, 3 of them have been under $500, and 1 of them was a little higher than normal at $700. But and that was a gap down that we had to deal with. But overall, that's the plan. You know, basically get in your trade, know your plan, set it and forget it. If you have to take profits a little earlier, again, we've adjusted to the choppy market. You can do that. But overall, don't worry about the fluctuations in the trade. Just set your trade and forget it. And I guarantee you, if you do that and you're not doing that now, you will see an improvement in your trading results. So for those of you who are not Trade Report members, you can go to bullsonwallstreet.com and head over to Swing Trader part-time trader free trial and sign up for a free trial here. You get trade alerts, a nightly trade report. You can see the trade report right here. This is yesterday's trade report. We've got a quick summary, a 10-minute video, then notes on the report where we go over the trading game plan. Yesterday I had a note on stop gunning, which has been prevalent in the market these days. The trades that we've made and the focus list for the coming days, along with sectors we're watching. And right now we're really into earnings season, so we're watching breakouts. There's a list of breakout plays. That's the trade report. You get trade alerts during the day, any trades that I make, and an intraday report going over the market, our focus list stocks, and setups that I might not be trading, but that are good for anybody else who would like to enter. So that's it for this video. I'll have one up again in the coming week or so.